Hello, welcome to the European Open briefing for Friday, April the 7th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the main news or the main impact on the markets is that airstrike by the US on Syria last night. We had quite a big reaction in terms of safe havens such as the yen and gold, but oil was also up due to the potential impact on regional supplies. The US dollar did react strongly immediately after after the news came out, although it's since steadied mostly even against the yen, as the focus now shifts to the March non-farm payrolls report that's due later in the US session. The risk aversion, though, did have quite a bit impact on the Australian dollar, which is down sharply against both the dollar and the Japanese yen. The euro, on the other hand, is steadier today after yesterday's dramatic tumble after very dovish comments by European Central Bank President Mario Draghi. But let's begin with the dollar and the US airstrikes on Syria. The US launched 59 missiles against a Syrian airfield where it is believed that the Syrian regime stored chemical weapons that were used in an attack that killed over 70 people a few days ago. The dollar yen fell about 0.7% immediately after the announcement, but it did recover rather quickly. Here we can see in the orange yellow in the chart, it touched a low of around 110.10. It's since moved back about the 110.50 yen level, and once again it proves that the 110 level is a strong support area for the pair. And even though we did see that 10-year US Treasury yields dropped below the 2.30% level, which it had managed to hold up since the US presidential election. Although that was a brief spike, nevertheless it did cross that important barrier. But despite that, the dollar yen is more stable now. The dollar index saw a much more limited reaction, mainly because other currencies fell against the dollar, so the dollar's drop was mostly against the Japanese currency. We can see the dollar index in purple here. It's currently trading around 100.64. And one of the reasons why the initial panic faded after the attacks, it's because there isn't too much expectation that we will see further retaliation by the US. Also, there was some relief from the what we heard so far about the summit between the Chinese and US presidents. It appears that the US is unlikely to brand China a currency manipulator. They now appear to be moving towards calling the current situation as currency misalignment in terms of certain currencies being undervalued against the US dollar and therefore giving other countries an unfair trade advantage over the US. And in brief comments about Trump's meeting with President Xi, he said that he has developed a friendship with the Chinese leader, so that did calm the markets a little bit. So the focus now is the non-farm payrolls report. We already had very good weekly jobless claims yesterday. So for the week ending April the 1st, jobless claims saw their biggest drop in 2 years. They fell by 25,000 over the prior week, and it's also the 109th week that the figure has been below the 300,000 level, which is associated with a healthy jobs market. So NFP is expected to come in at 180,000. That's down from last month's 235,000. Although an upside surprise is possible given that the private survey, the ADP employment report, showed a much stronger than expected number. Also in focus is going to be average earnings, because wage growth is an important factor to determining whether or not the inflation rise is sustainable or not. Going back to the risk aversion, the Japanese yen, we can see it rose broadly against other currencies as well, not just the dollar. Against the euro and the Aussie and the Kiwi, it touched 4.5-month highs. Here in the chart, we can see the yen against the euro and the Australian dollar. The reason why the yen always comes back in demand whenever there's such risk events is due to its perceived safe status haven, and that's mainly because Japan is one of the world's biggest creditor nations, so that's why it always benefits whenever there's conflicts or just general risk off in the markets. But also gold as well. We saw gold jumping to a 5-month high, $1,269 an ounce immediately after, and oil was also a winner out of the airstrikes, because of course if the airstrikes does lead to a wider conflict or tension in the region, it would potentially could lead to some supply disruptions. We saw WTI and Brent crude both jumping over 2% to 1-month highs. They've since eased off a little bit to stand just around 1.5% higher on the day. The euro now, we can see it's generally been drifting lower, though it's still managed to hold above the 1.0630 level against the US dollar. Yesterday, Mario Draghi, the ECB head, said that the ECB is unlikely to deviate much from its current forward guidance that it provides in its policy statements at its meetings. So it doesn't look like the ECB is planning on withdrawing its massive stimulus program anytime soon, although there is some debate within ECB policymakers, governing council members, of when the central bank should begin to cut back on its asset purchases or raise interest rates. So maybe the fact that the ECB is unlikely to cut rates or expand its policy program, that's providing some support to the euro, as well as, of course, we've had some fairly positive data out of the eurozone as well. We had good, strong German trade data out this morning. And here we can see those German data. Exports rose by 0.8% in February, beating expectations of a 0.5% drop. Although French industrial output was down in February. Coming out shortly, we've got UK industrial and manufacturing production figures, as well as UK trade data. And apart from the NFP data, which we did see in earlier slides, we've got Canadian employment numbers and the IV PMI as well. And in terms of speakers, we've got the Bank of England Governor Mark Carney and the New York Fed President William Dudley. They will speak later today, and that might capture some attention as well. That's it from me. Thank you very much for watching, and have a great day.